Good morning, everyone. Thank you for being here with us today. My name is Indira Diaz. I am Cementos Argos IRO, and I will be hosting today's conference call. First, I would like to ask you to carefully read the legal disclaimer that is currently being projected on the screen, which is also going to be available on the presentation, which will be posted on our website shortly after this call. Now, I would like to welcome Juan Esteban Calle, our CEO, Felipe Aristizábal, our CFO, and María Isabel Echeverri, the VP of Legal Affairs, who are going to share some important remarks with us before we open the Q&A session. Juan, Felipe, and Maria, good morning to you, and please go ahead.
Thank you, Indira, and good morning, everyone. Earlier this week, we announced the sale of our 31% stake in Summit Materials for roughly $2.9 billion, which represents around 10,000 Colombian pesos per every outstanding share of Cementos Argos. This reveals the significant gap still existing between the market price of our shares and the fundamental value of our company, and therefore contributes to closing this gap and generates value for our shareholders, which has been a decisive factor when analyzing and closing this transaction. Since 2021, when we announced our intention to partially monetize our investment in the US market via an IPO, and until the closure of the sale of Summit to Quikrete, the total value captured from these assets account for $4.5 billion, which represents a multiple of 15.4 times based on the estimated 2023 EBITDA of Argos USA. Moreover, the total price per share of Summit in this transaction accounts for $52.5, which is close to 50% higher than the $36 per share at which we negotiated and received the 55 million shares in January. We perceive this transaction as extremely beneficial for our company and our stakeholders, and as a turning point in our history in the US market after 20 years of deploying capital with a long-term vision of resilience and value generation. Today, we mark the start of a new chapter for Cementos Argos, under which we will continue to explore additional opportunities in the US market. Turning to slide 5, I would like to go briefly through our history in the US, which started back in the 60s with our first cement export to this country, a business that we still operate and will continue to operate after the closure of this transaction with Quikrete as our commercial ally in the US. In 2005, and after a careful analysis of our growth opportunities in the region, we decided to start an expansion strategy by investing directly into the US, a country in which we perceived even 20 years ago a significant opportunity to capture and generate value in the long term. In total, during the lapse of 5 years, we invested $815 million in 9 different ready-mix clusters in Texas, Arkansas, Georgia, North and South Carolina, consolidating a presence in the southeast and south center of the country, a region that was not only interesting for its underlying macroeconomic and demographic conditions, but for our capacity to generate synergies with our already existing footprint of cement operations in Colombia, Central America, and the Caribbean. The first years of our incursion to the US market were challenging, as the residential segment crumbled with the financial crisis of 2008, leading to cement demand falling by 55% from 2005 to 2010. During this period, our revenues were cut in half, and our EBITDA dropped to zero in the following years. However, in Cementos Argos, we believed in the long-term potential and committed to our strategy of becoming a vertical integrated industry leader, focused on high-demand regions, confident in the value that we could generate for our shareholders. In 2011, with the industry still struggling from the crisis and many players facing challenges we doubled down on our strategy, seizing M&A opportunities to strengthen our position in the cement sector. This made a decisive turning point in the history of Argos in the United States. The first acquisition of two cement plants with complementary assets in the ready-mix and precast businesses paved the way for becoming an incumbent, vertically integrated player in the country, set to capture value and continue its consolidation. With two more acquisitions in 2014 and 2016 to complement our footprint in cement, we forged our position as a top player in the South Central, Southeastern, and Mid-Atlantic regions of the U.S., with 9.6 million tons of cement production capacity per year. Between 2011 and 2016, as our presence grew and the industry began to recover, our financial performance in the country improved significantly, with revenues increasing threefold during this period and EBITDA going from being negative to nearly $200 million. Next, after expanding our footprint from 2017 to 2023, we shifted our focus from growth to profitability and operational excellence, and therefore entered a phase of platform optimization and consolidation. During this period, we executed $480 million in divestitures at accretive multiples of non-strategic ready-mix clusters, which, coupled with the operational improvement of our cement business, led to an improvement of 55% in our EBITDA and an expansion of our ROCE of 700 basis points. In parallel, as part of our commitment to unlock further value in this market, we announced in 2021 our ambition to launch an IPO for our operations in the U.S. We worked tirelessly to optimize operations and ensure regulatory compliance, and by early 2023, we were fully prepared to make this a reality. Ready to launch a public offering on the New York Stock Exchange while awaiting favorable market conditions, we announced in September of 2023 the combination of our U.S. assets with Summit Materials. This strategic move offered an alternative for shareholder value generation and an efficient path to execute our U.S. business strategy through a platform with a proven history of growth, real-time asset valuation, and high liquidity. By pursuing the combination with Summit Materials, we established a leading national building materials platform, consolidating a diversified revenue stream across key industry segments with a strong focus on cement and aggregates. This combination also secured access to an extensive network of ports and terminals, facilitating competitive imports to address undersupplied markets. Within 10 months of the integration, the enhanced platform effectively captured over $40 million in synergies out of the $130 million goal set by Sun. Since the announcement of this transaction in September of 2023, as the main pillar of our sprint program, we began to close the gap between the market valuation and what we consider the fundamental value of the stock. Since then, our stock has appreciated close to 250%, and we have delivered a TSR of more than 310%. This entire journey of strategic and thoughtful capital deployment, totaling $3 billion, led to a threefold increase in revenue and a fourfold rise in EBITDA that brought us to where we stand today, successfully closing a $2.9 billion deal that marks the culmination of a pivotal chapter in our history in the U.S. I would now like Felipe to go through the details and implications of this important event.
Thank you, Juan, and good morning to everyone joining us today. As you highlighted, this transaction represents a significant milestone for Cementos Argos and marks a crucial step in delivering value to our shareholders through the monetization of our stake in Summit Materials for $2.9 billion. This amount alone is equivalent to 10,000 pesos per Argos share. When considering the additional value associated to the $300 million of EBITDA of our LATAM operation, it is clear that, despite the strong appreciation of our share price, Argos still represents an attractive investment opportunity going forward. From the moment we announced our intention to IPO the U.S. operation back in late 2021 until the closing of this deal, we will have received $4.5 billion in cash, represented by $445 million in special distributions between 2022 and 2023, $1.2 billion in the context of the combination with Summit, plus the $2.9 billion associated to this sale. Altogether, these amounts represent an exit multiple of 15.4 times the 2023 EBITDA of Argos USA. On slide 12, we summarized our entire journey in the U.S. market to date. From 2005 to 2024, Argos invested $3 billion in acquisitions, with approximately $1 billion being equity contributions. Through strategic investments made at the right time and enduring tough periods with a vision of long-term value creation, the company generated around $1.6 billion in free cash flows, recouped $480 million from divestitures in the ready-mix segment, distributed $445 million of capital to Cementos Argos, and received a total pre-tax amount of $4.1 billion or $3.9 billion after taxes from the transactions announced in 2023 and 2024. Throughout this process, Argos multiplied its equity by 4.7 times, achieving an internal rate of return in US dollars of 20%. Regarding the proceeds of the transaction, I would like to emphasize that we intend to reinvest a significant amount of these funds in the US, as we perceived that there are still significant opportunities in this market. Our ambition is to recreate a platform similar in size and profitability to Argos USA. We will continue to operate the cement supply agreement with Quikrete while exploring new business opportunities in this market. Our strong position in LATAM and our solid track record of deploying capital and delivering return to our shareholders will allow us to achieve this objective while reinforcing our presence across the Americas.
Thank you, Felipe. Before we move to the Q&A session, I would like to briefly highlight that the transaction is expected to close in the first half of 2025, subject to the necessary regulatory approvals, customary closing conditions, and approval from Summit's shareholder. Additionally, the gain on sale expected to be recorded between Q4 2024 and Q1 2025 is estimated at $900 million. We will continue to disclose all relevant information to the market as needed. Thank you all for being here today. It is with great pleasure we share with you the completion of this agreement, in which Argos marks another significant milestone in its presence in the U.S., delivering extraordinary value for its shareholders, significantly strengthening its financial position, and opening up a range of opportunities to continue building on its exemplary track record of growth and value creation. Indira, we can proceed now with the Q&A session.
Thank you, Juan. We will proceed then with the Q&A session. Please remember that in order to ask a question, you need to raise your hand using the icon that is at the bottom of your screen. I will say your name and company and will enable your microphone. Take into account that you need to unmute your microphone before you speak. First question comes from Alejandra Obregón from Morgan Stanley.
Hi, good morning, Argos team, and congratulations on the deal, and thank you for taking my questions. The first one is that perhaps I would like to double click on your comments on how to think of Cementos Argos for the future. So I wanted to ask about your long-term strategy. Like, where do you see Cementos Argos growing? You mentioned the US, but if you can help us a little bit more on that, like what type of investment, what type of markets, say EM, developed markets, what type of business lines are you wanting to go back to upstream in the US, or is it perhaps more on the downstream? Anything that can help us perhaps understand that, like, what do you think is the most attractive markets for growth for Cementos Argos in the future? So that's the first question. And then if I can talk a little bit more about on the proceeds, if you could help us understand like how much of that is going to be organic vis-a-vis inorganic investments, how much of that is going to be buybacks, dividends, anything that can help us understand your capital allocation strategy as you see those proceeds coming to your balance sheet. Thank you.
Good morning, Alejandra, and thank you for your questions. I mean, what we'd like to do going forward is to keep the same strategy that Cementos Argos decided decades ago. We have been considering the US as a core market for Argos since, as we mentioned, the 1960s when we started exporting cement to the US. I think that we proved during the last 20 years that it makes a lot of sense to continue having a significant presence in the US market. We are extremely happy with the results of that first stage of the direct presence of Cementos Argos in the US. We will give more detail about the deployment of that capital in the US when we launch Sprint 3.0 with the result of the fourth quarter of the year. But the reality is that we see the US as the core and principal market of Cementos Argos going forward. In the meantime, the US will continue to be a significant lever for our markets in Latin America. We will continue exporting cement. And as we have mentioned in many opportunities, we are in the process of building an aggregates export platform out of Central America and the Caribbean to the US that will be complemented with the export of puzzolans in the future as well. But we will provide additional details with the launch of Sprint 3.0.
Excellent, thank you. And if you can comment a little bit on perhaps on how much of that is expected to be organic vis-a-vis organic, or should we wait for that Sprint 3.0 strategy?
We will be open. I mean, we will have basically an open page, I mean, to continue building our presence in the US, but we will provide additional detail with the launch of Sprint 3.0.
Excellent, thank you very much.
Next question comes from Gordon Lee from BTG.
Hi, good morning. Thank you very much for the call and congratulations on not just on this last transaction, but obviously on the whole history in the U.S. I have two questions, maybe even a third if possible. But the first question is, have you ruled out completely the possibility that repartnering up with Quikrete, becoming a partner with Quikrete is one possible avenue for redeploying capital into the U.S., or do you intend to exit completely from these assets via this transaction? I'm just wondering whether there's conversations on the side that could continue. The second question is if you could give us a sense of what the tax implications are for Argos from this transaction. And I guess the final question is, and I know that you'll give us more details in the context of Sprint 3.0, but could we expect a portion of these proceeds to be distributed out to shareholders either through additional extraordinary dividends or a step up in the buybacks? Thank you.
Thank you, Gordon. I mean, once this transaction closes, I mean, we will exit completely from the platform. The company will become a private company, so we will completely exit from the platform. It doesn't rule out, I mean, future partnership with Quikrete or any other player in the U.S. market. I mean, we will be looking at all the available options for Cementos Argos. Regarding the tax implications, I would like Felipe to give you more color.
Hi, good morning, Gordon, and thank you for your questions. So we expect taxes to stand at around 10% of total proceeds from from this transaction. And then regarding the capital allocation and eventual distributions to shareholders, for the time being, we're not expecting significant deviation from our capital allocation exercise. So we're not anticipating an acceleration in buybacks or a significant increase in dividends for now. We would prefer to reinvest this capital in opportunities that generate value in the long term for our shareholders.
Perfect. Thank you. That's super clear. If I could just have one quick follow-up on the taxes. So the expectation is 10% of the gain from this transaction that was announced this week, right? And this will not trigger any taxes from the original on the gains from the original transaction with Summit. Is that correct?
So yeah, this transaction will not trigger any taxes associated to the transaction with Summit that closed in January of this year. Total taxes for this second transaction would represent around 10% of the total cash consideration. So anywhere between $230 to $50 million.
Perfect. Understood. Thank you very much.
Of course.
Next question comes from Adrian Huerta from JP Morgan. Hi, Adrian. Okay, I think he's having some issues. Let's move to. Okay, sorry. We can hear you now. Hi, Adrian.
We all muted. Good morning, everyone, and congrats, Juan and team, on this transaction and everything that you have done in the US so far, on looking for ways to unlock value for shareholders. I have two questions. The first one is, I guess this sale got you guys by surprise, and so if that is the case, does this mean that you're just starting to shop around for potential investments, or did you actually have been looking for opportunities? Review where probably were not large and now looking for larger ones. So you can just give us a little bit more details on that. If you're already working with banks and with different banks looking for opportunities, etc. And the second one, when you say all options open, do you guys already have a certain kind of a criteria that you want to follow with things like it has to be a controlling stake or it can be a minority stake? This could be in any business aside from cement and ready mix, or it will also be within cement and ready mix. Will also be including opportunities, other opportunities in LATAM. So just more details on that if there's a certain criteria that you have internally already for that.
Thank you for your question, Adrian. I mean, the reality is that we were not expecting this transaction, but when the offer came and we looked to maximize the value for our shareholders, and in our opinion, it makes a lot of sense to go ahead and accept the proposal, but we were not expecting this. And until the transaction closes, I mean, the reality is that we will not be engaging in any active look up for opportunities in the US. The reality is that we still need to wait until the transaction closes. When we say that we have an open page to fill in the US in our next chapter, is that we will look at all of our options from a value generation perspective for our shareholders. It will include the buildings materials sector, of course, and close adjacencies as well, if possible. But we will be open, I mean, to consider all type of options as long as they are consistent with our strategy of value generation to our shareholders.
It's very clear. Thank you, Juan, and congrats again.
Thank you, Adrian.
Next question comes from Yassine Touahri from Onfield.
Yes, good morning, and congratulations also on this transaction on the share price development of Cementos Argos. It's been quite impressive. I would have three questions. First, on your export of cement to the US, do you know how much Quikrete is consuming cement in its mortar on a precast operation? I can imagine that they're a very big purchaser of cement. And the reason I'm asking this question is that because I'm wondering if you could see Quikrete using Argos and Summit Import Network to ramp up their import of cement into the US to benefit from a lower cement cost. And is it something that you could benefit from because of your relationship and your ability to export to the US?
Thank you, Josine. At this point in time, I mean, the only certainty that we have is that the supply agreement that we have with Summit will continue under Quikrete if the transaction closes. But we don't know and cannot comment on the strategy of Quikrete with regards to our imports of cement and the terminals.
Another question would be on your strategy to reinvest in the US. What I can see when I'm looking at the sector is that you've got a lot of companies like CRH, Heidelberg, Holcim, Vulcan, Martin, Cemex. They're all considering to invest as well and to deploy capital in the US. And they've got more than $30 billion of firepower. And when you think about your strengths, your knowledge of the market, where do you think you can differentiate yourself from those other purchasers? Where do you think you will be in a better position to create value? Is it because you can buy import facilities that are close to the coast? You understand the ready-mix concrete market? You're in a good position to buy cement assets? I just try to understand how you can differentiate yourself and create value in an environment where a lot of other companies are trying to buy assets in the US.
Sure, Yasin. I mean, we will be patient, and we will look for value-generating opportunities for our shareholders. Nearshoring is a significant opportunity for us. We have been exporting cement to the US since the 1960s, and we will look to complement that export capability from Central America and the Caribbean with ags and with puzzlelands as well. We see a significant opportunity in puzzlelands going forward, and not only in the US, but in many other developed markets. So the reality is that we will be very patient redeploying the capital, but we are completely sure that we will find a lot of interesting opportunities.
And the last question, which is we see a lot of noise around potential tariffs. Is it something that could impact your export to the US?
We will wait and see, Jason, but the reality is, as you know, the US will need to continue importing a lot of cement and ags. There is a lack of cement in the US market. There is not enough domestic capacity, and we are seeing similarly need for aggregates in many of the coastal markets of the US. So independent of the tariffs, in our opinion, there are going to be a lot of opportunities going forward.
Thank you very much.
Next question comes from Marcelo Furlan from Itaú.
Hi, everyone. Good morning. Congrats on this transaction, and thank you for taking my question here. My question is also related to capital allocation. I mean, I would like to know, of course, you guys are going to provide more detail on Sprint 3.0, but my question is related to if you guys still see maybe some room to reinvest part of this cash proceeds into the Colombian division, maybe to reduce costs or to increase market share. So I'd like to hear more color on future strategies for the Colombian division. Thank you, guys.
Thank you, Marcelo. We are extremely happy with our position in Colombia. Our strategy in Colombia is CapEx light. We don't need to deploy a lot of capital in Colombia to continue performing as well as we are performing so far. So the idea is basically to privilege the US market for the redeployment of that capital. We are not thinking to deploying that capital into Colombia.
Okay, thank you so much, guys.
Next question comes from Hernan Kisluk from MetLife.
Good morning. Thank you for taking my question and congratulations on the transaction. My question is on your capital structure and particularly on the debt stack. If with the proceeds that you're going to receive that are going to be plentiful, are you planning to do any changes in the debt stack that you have in terms of size, or maybe changing the composition or instruments that you have there?
Thank you, Hernan, and I would like Felipe to answer your question.
Hi, Hernan, and thank you for your question. So initially, we anticipate to prepay all of our bank debt. We still have some bonds outstanding in the Colombian market. They are not callable, so we are still deciding on how to address, that portion of the cap structure. But yeah, initially we're expecting to prepay all of our banking debt, and are still considering options to optimize the cost of debt going forward. But yeah, eventually we anticipate that our net debt is gonna be negative until we start deploying the resources of and the proceeds of this sale.
Got it. Thank you very much, Felipe.
Next question comes from Sergey Duban from Harding Loevner.
Yes, good morning, gentlemen. Again, congratulations on this transaction. You obviously done a great job unlocking value over the last couple of years. My question is, you spoke about your intention to deploy the proceeds into U.S. market, and you yourself, obviously benefited from, the high multiples that U.S. cement assets command because of all the reasons that we know that, the market is supply constrained, et cetera, et cetera. But given that, how are you thinking about, when you're going to be in a position of buyer of the assets as opposed to seller of the assets, where would kind of the advantage come from in terms of you being able to buy, more opportunistically than other players, or you being able to operate them better than other players? Like where, if you're starting from a clean slate with 3 billion of cash, like where do you think you can create value in that? Thanks.
Thank you, Sergey. We consider that we have some capabilities that are important to complement any player in the US once the transaction is closed. The opportunity that we have to export cement, ags, and puzzolans at highly competitive cost from Colombia, Central America, and the Caribbean to the US. Our knowledge of the logistics, terminals, and the US market acquired during these last 20 years, in our opinion, will allow us to find the correct opportunities to deploy that capital in a smart and value-generating way to our shareholders. But we will be patient, and we will be considering many opportunities. So the reality is that we are confident that we will be able to make a smart deployment of that capital into the US market.
Okay. And did I understand correctly that Sprint 3.0, the launch of that would be during Q1 of 2025, when you're going to be providing more details on that?
That is correct, Sergey. We will be providing more details with that launch of Sprint 3.0, which will be in the first quarter of 2025.
Okay, got it. Thank you.
Next question comes from Daniel Guardiola from BTG.
Hi, good morning, Juan Esteban and Felipe. Just a quick one from my end, and it's related to the reallocation of proceeds that you're going to receive from this divestiture. And I wanted to know if you're considering to redeploy a portion of this cash into Latin America, not Colombia, but the other emerging market countries of Latin America. And if so, if you could give us some color on which country you consider attractive and which country you think you can add some value to your shareholders.
Thank you, Daniel. We would like the US to continue being our main market going forward, but the reality is that we wouldn't rule out considering some smart deployment of capital into other interesting and core markets in Latin America. But the reality is that our main objective will be to deploy that capital into the US.
We have one follow-up question from Gordon Lee from BTG Pactual.
Hi, thanks, Indira. Thank you. Thanks very much for the opportunity for the follow-up. Just very, very quickly, obviously you see the great potential that you have in terms of increasing exports, cement, aggregate, cementitious materials, et cetera, from not just from Colombia, but from the rest of your network. I guess my question is, do the ancillary agreements you have with Summit and now with Quikrete in any way limit your ability to do that before 2028? Do you have to do it with them? Or do you just have the commitment to supply the Houston terminal with them, and then you're free to pursue other avenues of export growth? Thank you.
Thank you for the question, Gordon. Once the transaction closes, the only commitment that we will have with Quikrete will be the supply agreement of cement. Other than that, we will be completely free and open to explore any other opportunity in the US. No constraints.
Including cement in other markets?
Including cement in other markets.
Perfect. Thank you. That's very clear. Thanks again.
Thank you, Gordon.
Next question comes from Sebastián Gallego from Ashmore.
Hello, good morning. Can you hear me?
Yes, we can.
Thank you. Good morning, everyone, and thanks for the presentation. I would just like to follow up on the capital allocation and the US. We have seen several of your competitors looking for opportunities in the US to redeploy capital, but they have taken longer than 1 year, 2 years, or even more than that. So my key question on that specific topic is, why are you so confident that you can redeploy so much money within, let's say, 6 months or 1 year? And whether would you consider an alternative capital allocation if you're not able to redeploy that amount of money within 1 year? Thank you.
Thank you, Sebastián. We are not setting a timeline of 6 months or 1 year for the redeployment. Phase 1 will be to strengthen our export platform of ags, cement, and pozzolans to the US, and that opens significant opportunities for phase 1. But we are not putting ourselves a time limit of 6 months or 1 year to redeploy the capital. We will be patient, and we will only redeploy the capital if we find the right opportunities. So we have no restrictions in terms of time.
Perfect. Thank you.
We have a follow-up question from Yassine from Onfield. Go ahead, Yassine.
Yeah, yes, thank you very much. Maybe just a follow-up on this platform of ags, cement, and pozzolan. On cement export to the US, how confident are you that you can offer better prices that Vietnam or Algeria that are very, very competitive when on FOB prices? Do you feel that today you can offer a better price, CIF, than Algeria and Vietnam to the US? And then a second question on ags. We see in the news that you might have a 25% tax on import from Mexico and Canada that are delivering a lot of export of ags to the US. Is it an opportunity that you can seize to get market share if this materialize? And the last question on the pozzolan. I understand that today it's a little bit difficult for Department of Transportation and a lot of contractor to use a different kind of cement. There is a bit of pushback, for example, on the type 1L. How confident are you that the construction standard will allow you to export pozzolan in big quantity in the US?
Thank you for your questions, Yassine. I mean, we are not expecting to export cement at lower prices, CIF, than any other competitor. It's just that from the near short position that we have vis-a-vis Algeria or Turkey or Vietnam, we consider that we have a competitive advantage. Our cost structure in Cartagena is extremely good. So we foresee our export journey of cement to the US to continue going forward. Then in ags, what we are seeing is a lack of ags in the coastal market of the US. And as you mentioned, Mexico had some issues with the operations there, Honduras as well. So the reality is that there is an opening in the market. And in terms of puzzlelands, in our opinion, that is going to be the future of the industry no matter what. So we remain very confident that that line of business is going to pay back good dividends in the future. And we are very confident that we will be able to deploy that strategy.
Thank you very much.
We have one follow-up question also from Alejandra Obregón from Morgan Stanley.
Hi, thank you again for taking my question. It's just a follow-up. So you talked about building a new network for the US. Just wondering if your export business from Latin America limits the opportunity to thinking, outside of the Southeast coast. So is there a possibility that you could build a network in another region, and then on top of that, you have your export business growing from maybe Colombia or even Costa Rica?
What we see is an opportunity in all the coastal markets in the US. The reality is that, once again, we will provide more detail on the launch of Sprint 3.0, but we are not ruling out any of the coastal markets at this point in time.
Gotcha. Thank you very much.
Juan, we have one final follow-up question from Sebastián Gallego from Ashmore.
Perfect. Go ahead, Sebastián.
Hi, me again. Sorry, one just follow up, if I may. Can you comment on whether you have, from a legal perspective, any non-compete from this transaction with Quikrete, or can we just assume that everything is fair game going forward in the US?
Thank you for the question, Sebastián. Once the transaction closes, we will not have any non-compete or any restriction, and everything is going to be fair game in the US.
Very clear. Thank you very much.
We have no more questions, Juan.
Okay. Thank you, everyone, for attending this conference call, and we look forward to our first conference call of 2025, when we will present the closing results of Cementos Argos for 2024. Extremely happy with this transaction, and extremely happy and confident with the future ahead of us. So thank you so much, and have a great day.